All right, welcome to another video, everyone. I was just wrapping up my quarterly taxes. It is the end of quarter one, 2024, and we're just now finishing up. I'm sending the accountant some last minute documentation for yearly taxes. And I haven't really talked much about taxes in terms of private practice. For one, it's miserable for most people. Just like the numbers, the accounting part, the math, the addition, the subtract. I went to school to be a therapist, not a math person or a numbers person. So it's really hard for me. And I'm not an accountant, so it's not my specialty, so I don't talk much about it. That being said, I wanted to share a couple of things that I think could be helpful from my own experience, and things that I wish people had shared with me a little bit earlier on. I'm not an accountant, so don't take this as accounting advice. I would encourage every person who's starting a business, not just a private practice, but any business, to consult with an accountant. That being said, let me share with you a couple of things. So when I was an employee, I was, you're a W-2 employee. You get your paycheck, and all the taxes are taken out for you. So I'd never really had to do that. Right? I do my end of the year taxes, but I never had to do like quarterly taxes or account for taxes with every payment that came in. When I started my private practice, you become self-employed, right? And so then the income you earn that goes into your bank account is not taxed, right? Not taxed for you. You have to account for that. So that was an adjustment, right? So the numbers might look, they might look good. For example, you might have, $50 comes into your bank account. You go, wow, look at that, $50. And then you realize, oh my gosh, there's no taxes taken out of this. And so now we have to account for that. What I've been estimating around 31%, that's a pretty big number, right? So you go, I don't have a calculator on me, 31% of 50, right? So you minus that, and now we have a much smaller number than 50. And so that's one adjustment. Number two was kind of figuring out how did I get to 31%? Well, that came with talking to an accountant, right? And now every accountant is going to give you slightly different numbers. But what's been worked for me in my practice is estimating around 26% for IRS payments and around 6% for state payments. And I'm in the state of New York. So if you're in the state of New York, 31%, that seems to work well for me. But again, that is something you should ask an accountant. And so again, you kind of keep in mind whenever you get payments that about 31% of any payment is going to go to taxes. So you have to make sure you don't spend that or, withdraw that money too prematurely. The other thing, and this was probably the most confusing thing, was realizing that I had to pay taxes quarterly by myself. So you have to make estimated, again, I'm in the state of New York, and the accountants had shared with me that because I'm self-employed, I now have to make estimated quarterly payments. So every quarter, every 3 months, I log into the IRS website, I make an estimated payment. I log into this state of New York website, and I make an estimated payment. Again, I use the 31% of what I earned. So that was a new adjustment. Number one, just getting used to every quarter, spending some time logging in, doing the calculations in my bank account, and then making the payment to the IRS and the state. Now, to do this, there's a couple things you need to do practically, and I'll leave links down below to the websites that will point you in the right direction. But you're going to need to set up I don't even know, the websites are so bad, but you want to set up an account on the IRS website that allows you to make online payments. Your accountant can probably help you with it, but I'll leave you a link down below to the website, how I log into the IRS website to make a payment. And then whatever state you're in, they're also going to have a website where you can make estimated payments as well. For the state of New York, I'll leave that link down below as well. So yeah, and then the other thing that you have to do, with your taxes and accounting, and this isn't so much tax, but this is I was just doing this as well. You have to manage your books, if you will. So you have to kind of keep track of what goes in, what comes out. And perhaps I'll make another video on that as well. I really just kind of wanted to focus in on the tax part for today. I've been talking for about 4 minutes and 59 seconds about taxes, and that's enough to overwhelm me. So we won't go into much more detail, but let me just kind of recap what we talked about. Number one, when you go from an employee to your self-employed or an employer, you are going to have to be mindful that your income is not taxed. You have to account for that percentage. You want to figure out what that percentage is. The best way to do that is by talking to an accountant. Again, I'm in the state of New York. I've been doing quite well with 26% IRS and 6% state taxes, and that comes out to roughly 31%. Am I doing math correctly? 26 plus 6, is that? Sorry, that comes out to 32%. This is why I don't do math, right? 27, 28, 29, 30, 31, 32. Okay, so maybe it's 26 and 5. It's something like that. You know what? I might have it pulled up. Give me 1 second. This is my math. Okay, 25 and 6. 25% IRS and 6 state. Okay, yeah, this is why I don't do that. All right, so you want to keep track of that. And then finally, you want to make accounts for the IRS and for your state so you can make estimated quarterly payments. Again, check with your accountant to make sure that's something you need to do, but that's what I needed to do. Anyway, I hope this video was helpful for you, at least somewhat insightful. Not the most entertaining video, but I hope educational. Anyway, I look forward to seeing you in the next video.